Today, we're taking a deep look at Strategy, formerly known as MicroStrategy, ticker symbol MSTR, and asking one major question. Can MSTR reach $200 or even higher by 2027? MSTR is one of the most unusual stocks in the market because its valuation is now driven primarily by Bitcoin rather than its traditional software business. With Bitcoin representing the core of Strategy's balance sheet, investors need to understand Bitcoin exposure, BTC-per-share, debt, preferred securities, dilution, and the premium investors are willing to pay for MSTR. Based on my current scenario analysis, I see a 2027 bear case target of approximately $55 to $70, a base case target of $115 to $140, and a bull case target of $180 to $230. Strategy is no longer a stock that should be analyzed like a traditional software company. The company has transformed itself into one of the world's largest corporate Bitcoin holders. That means the most important question for MSTR investors isn't simply how much revenue the software business generates. Instead, investors should focus on how much Bitcoin Strategy owns, how much Bitcoin exists per common share, how the company finances additional Bitcoin purchases, and what valuation premium the market assigns to the stock. In simple terms, MSTR behaves like a highly leveraged Bitcoin investment vehicle combined with an enterprise software business. The biggest asset on Strategy's balance sheet is Bitcoin. Strategy reported approximately 843,775 BTC at July 26, 2026, although subsequent transactions have reduced that figure somewhat. This enormous Bitcoin position means that even relatively small movements in BTC can have a massive impact on the company's asset value. For example, if Strategy owns roughly 840,000 Bitcoin, every $10,000 increase in Bitcoin represents roughly $8.4 billion of additional gross Bitcoin value. On the other hand, a $10,000 Bitcoin decline would reduce the gross value of those holdings by approximately $8.4 billion. One of the main reasons investors buy MSTR instead of simply buying Bitcoin is leverage and potential BTC-per-share growth. Strategy can raise capital through common stock, preferred securities, and debt, and then use that capital to acquire Bitcoin. If the company can raise capital efficiently and increase Bitcoin exposure faster than it increases its share count, shareholders can potentially benefit from increasing Bitcoin exposure per share. This is one of the key reasons MSTR can outperform Bitcoin during strong crypto bull markets. The same mechanism that can make MSTR outperform Bitcoin can also make the stock significantly more dangerous. If Bitcoin rises rapidly and investors are willing to pay a premium for MSTR's Bitcoin exposure, the stock can potentially outperform BTC by a large margin. But if Bitcoin falls while the MSTR premium simultaneously contracts, shareholders can experience a much larger percentage decline. Therefore, MSTR should be considered a high volatility investment rather than a simple Bitcoin proxy. Strategy still has an enterprise analytics software business, but the software operation is no longer the main driver of the company's valuation. The software business provides recurring revenue and strategic value, but compared with the enormous Bitcoin treasury, its contribution to the overall investment thesis is relatively small. This is why traditional metrics, such as price to earnings, or a conventional software company, DCF, are less useful for valuing MSTR. Investors should instead focus heavily on Bitcoin NAV, BTC per share, capital structure, and the MSTR premium or discount to its underlying asset value. Another important part of the MSTR story is its capital structure. Strategy has accumulated significant debt and has also issued multiple preferred securities. These financing instruments allow the company to raise large amounts of capital without relying exclusively on common stock issuance, but they also create financial obligations that sit ahead of common shareholders. Therefore, investors shouldn't simply take Strategy's Bitcoin holdings and divide them by the number of shares. A more appropriate valuation approach needs to consider Bitcoin assets, cash, debt, preferred claims, dilution, and other obligations before estimating the value attributable to common shareholders. For MSTR, one of the most important valuation concepts is mNAV, or the multiple of market value relative to the underlying net asset value. If investors are extremely bullish on Bitcoin and highly confident in Strategy's capital raising strategy, they may be willing to pay a large premium over the company's Bitcoin-related NAV. But if sentiment turns negative, that premium can shrink dramatically. This means MSTR can fall even when Bitcoin isn't experiencing a major crash. The compression of the valuation premium itself can create significant downside for shareholders. Another development investors should watch is Strategy's willingness to sell Bitcoin as part of its liquidity and capital management strategy. Recent transactions showed the company selling approximately 1,690 BTC while simultaneously raising capital through MSTR issuance. This doesn't automatically mean the Bitcoin strategy has failed. However, it demonstrates that liquidity management is becoming increasingly important as the company's capital structure becomes more complex. Investors should therefore monitor future Bitcoin purchases, sales, share issuance, and financing costs very closely. For MSTR, I would use an asset-based valuation model rather than relying primarily on a traditional DCF. The basic framework is to calculate the market value of Strategy's Bitcoin holdings, add cash and the value of the software business, subtract debt and preferred claims, and then estimate the resulting NAV attributable to common shareholders. After that, investors need to decide what premium or discount should be applied to the NAV. That final premium is extremely important because it can have a major impact on the MSTR share price. Let's start with the bear case. In my bearish scenario, Bitcoin falls or remains weak and potentially trades around $45,000 to $55,000 during the 2027 period. At the same time, investors lose enthusiasm for MSTR and its premium to NAV contracts significantly. In this environment, Strategy could face greater financing pressure, dilution could become less attractive, and the market could assign a much lower premium to the stock. Under this scenario, I estimate a potential MSTR price range of approximately $55 to $70. This represents the major risk investors need to understand before buying MSTR. My base case is considerably more positive. I assume Bitcoin recovers toward approximately $90,000 to $110,000 during 2027, while Strategy continues to manage its Bitcoin treasury and capital structure effectively. In this scenario, I don't assume an extreme MSTR premium. Instead, I assume investors continue to assign a moderate premium because of Strategy's ability to access capital markets and potentially increase BTC exposure per share. Under these assumptions, I estimate an MSTR 2027 target range of approximately $115 to $140, with a central estimate around $125 to $130. Now let's look at the bull case. If Bitcoin enters another major bull market and reaches approximately $140,000 to $180,000 or potentially higher, MSTR could experience an extremely powerful move. Higher Bitcoin prices would increase the value of Strategy's massive BTC treasury, while stronger investor sentiment could simultaneously expand MSTR's premium to NAV. If both factors happen together, MSTR could potentially reach $180 to $230 during 2027. A price above $200 is therefore possible, but it would require a significantly stronger Bitcoin environment and continued investor demand for MSTR. Putting everything together, my current scenario framework gives MSTR a bear case target of $55 to $70, a base case target of $115 to $140, and a bull case target of $180 to $230. My central estimate is approximately $127. The important point is that these aren't precise predictions. MSTR's valuation can change dramatically depending on Bitcoin's price, capital raising, dilution, BTC accumulation, debt, preferred securities, and the premium investors assign to the stock. The biggest potential catalyst for MSTR is obviously Bitcoin. If Bitcoin begins another major bull cycle, Strategy's enormous Bitcoin holdings could generate significant increases in asset value. Another catalyst would be continued institutional demand for Bitcoin and stronger regulatory acceptance of crypto assets. MSTR could also benefit if management continues to raise capital efficiently and increase Bitcoin exposure without excessively diluting existing shareholders. Finally, if investors once again become willing to pay a significant premium for MSTR's Bitcoin strategy, the stock could potentially outperform Bitcoin by a substantial margin. The biggest risk is Bitcoin itself. If Bitcoin falls sharply, MSTR can fall even more. The second major risk is mNAV compression, because the stock can decline simply because investors become unwilling to pay a large premium over NAV. The third risk is dilution from future share issuance. Capital raising can be beneficial when done at attractive valuations, but excessive dilution can reduce the benefit to existing shareholders. Another risk is the company's debt and preferred securities, which create obligations that must be considered before calculating the value available to common shareholders. Finally, liquidity pressure could become more important if Bitcoin enters a prolonged bear market. So, what is my final rating on MSTR? At around the current price near $97, I would classify MSTR as a hold for conservative investors and a speculative buy for investors who specifically want high-risk Bitcoin exposure. My base case 2027 target is approximately $115 to $140, with a central estimate around $127. The upside could be substantially higher if Bitcoin enters a powerful bull market, but the downside could also be severe if Bitcoin declines and the MSTR premium compresses at the same time. My final conclusion is that MSTR should not be viewed as a normal technology stock. It is essentially a highly complex Bitcoin treasury company with an enterprise software business attached to it. The investment thesis can be extremely powerful during a Bitcoin bull market, but investors must be comfortable with much higher volatility and much greater downside risk than simply owning Bitcoin. At current levels, I see a balanced but speculative risk-reward profile, with a 2027 base target around $127, bear case of $55 to $70, and bull case of $180 to $230. For me, the overall rating is hold, speculative buy, depending on the investor's risk tolerance and Bitcoin outlook. If you believe Bitcoin is entering another long-term bull market, MSTR could potentially provide significant leveraged upside. But if you believe Bitcoin will remain weak or volatile, MSTR carries substantial downside because both the underlying Bitcoin value and the stock's valuation premium can move against shareholders. So before investing, the key question isn't simply, can MSTR reach $200? The better question is, where will Bitcoin be in 2027? And what premium will investors be willing to pay for Strategy's Bitcoin treasury? That is ultimately what will determine where MSTR goes next.